Okay, recording this video after close of trade Friday, 15th of October 2010. And there we go, interesting day to end the week. 2.1 million contracts traded. We closed at 1175. Today's activity was not dissimilar to yesterday. We kind of sold off hard in the morning, then kind of bounced in the afternoon. Closed up almost 2 points from the prior day, and moves like that make the uptrend look like it's still in place. And I must say, on BetterX trend, I've not had any kind of signals to pull my stop up, volume trailing stop on BetterX trend. However, the Trin oscillator has turned down. We've got those kind of signaling short, and I'm seeing some weakness in other markets. I suppose for me, a little bit the jury's out. I had a comment from one of my subscribers saying I was way too bearish. I mean, yes, I am. I'll take that on the chin. So I'm always looking for the market to reverse, but let me just show you what I'm seeing on my charts. The first one, Euro chart here, and this is kind of a lesson in point for me on reversals, and just talking about kind of these three preconditions for a change in trend. The three indicators that I use on the better series of indicators: a better sine wave, which is based on price alone; better momentum, based on volume, buying and selling volume alone; and the third indicator is better pro-am, which is based on the average trade size alone. So the three indicators, for me, the strength in the analysis is that they're non-correlated indicators, and so for me, I need a change of trends needs to have all three of those pieces to signal a change in trend. And I was talking yesterday that in this up move in the euro, where we broke above 140, came up to 141, that we hadn't really seen professional up bars as part of the equation. Yes, we were having kind of end of trend warning signals and so on, signaling price exhaustion and exhaustion in terms of buying volume and so on. Here today, we almost reach 41.50 on the euro, but that's what I need to be looking for. So look at these professional blue bars making new highs. That's professionals getting out. End of trend warning signal, very weak buying. We'd had our exhaustion buying, we'd had flush signals, bearish divergence, very weak buying at this point. Professionals, bang, and the market really kind of slides away. Now we could easily kind of retest and so on, but just to reiterate, these are the three kind of preconditions. I need to see price exhaustion, volume exhaustion, and professional activity at the highs, and that's what I was missing in this whole up piece here. Interest rates. Now, for me, the story of this week was the bond markets, and I'm just going to show you these bond charts. So I've been talking about this over the last month or so, possibly, but a significant turning point was coming up to the bond market. So now, this is daily interest charts, and you can still plot better sine wave on the interest rate charts to give you an indication of where the turning points in interest rates are. And this is this cyclical turning point on the daily chart of the 30-year bond contract that I was been talking about. And this same kind of turning point, and this week, I mean, it got nailed. And we've had 5 days of rising rates. Let me just show you what's happening on the daily charts for the TN. So this is the 10-year contract. Again, we kind of broke a little bit below that cyclical turning point, and then kind of Friday was a big move up. Again, daily chart FV. This is the 5-year. We significantly kind of broke below that turning point here, but we are starting, and because these interest rates will move pretty much in sync, you need to be looking at the three charts. Now, why is this important? For me, this is important because if you look at the monthly charts, we've got cyclical turning points being put in on the monthly charts. And when you look at these monthly charts, so we're going to have a confirmation this month of a cyclical low here at 3.5% on the 10-year, I beg your pardon, on the 30-year here. And these interest rate cycles on the monthly chart, I mean, these trends last for a year. So if we're seeing a low being put in at 3.5% on the 30-year, and we expect that to rise over the next year possibly, if that's what's actually going on, then that's significant. That will impact a lot of different things. That will, particularly the debt that the US is getting into. Now let me just show you the charts monthly. So this is monthly on the 10-year. Again, cyclical turning point. Starting to signal there, and the monthly 5-year, again cyclical turning point here, which will be an end of trend warning signal, and we're down here at 1.1% here on the 5-year. So I don't use this to day trade necessarily, but as someone who's looking at the bigger picture and the economy and the markets and so on, this is not insignificant. And let me just show you. So this is, on last weekend's video, I was talking about how this Wednesday, Thursday activity I thought was really important in a whole bunch of markets, but particularly on the 30-year contract on this longer time frame tip bar chart. This was the Thursday of the week before last, and you had all these professional blue bars coming into that 135 level, cyclical turning point. We had all of these flush signals, came back to test, bearish divergence, and then this is this week. This was Monday. The market's shut. The bond market was shut for Columbus Day, and we sold off really hard. We've broken below another cyclical support level here, and now we start to see some kind of exhaustion selling on the downside. But this move isn't over until we see everything coming together. But this is not unimportant. And then when we look at the higher time frame charts, let me just show you these. So again, 30-year contract on the daily chart here. So this is going back. So coming into mid-August, we had an end of trend warning signal. All the professional blue bars up here. So we've got exhaustion in price, professional activity, exhaustion buying. That's my trifecta. That's where we get starts of changes in trend. We came back. We've come back to test now. In the last few weeks, we've been testing here. We had a flush signal coming up to here. We've now had all these bearish divergent signals here, and then the market started to take off to the downside. So this is not insignificant. Let me just show you this on the weekly chart. Now, when you look at the weekly chart, this is a double top being made compared to back in late 2008 into 2009. Last time we reached here, exhaustion, buying volume, Rambo patterns. Now we've got a little bit of a double top happening here, again just under 136. We've had our exhaustion, buying, bearish divergence, and so on. And so, this could be rolling over, and this will be really significant. And then when we go to the monthly charts, in terms of the monthly charts, just had exhaustion, buying on the upside. All right, there we go. Now, for me, the bond market is tricky. You get periods of time, months and years, where the bond market and the equity market are positively correlated together, and then you get months and years when they are negatively correlated. So, what this means for the bigger picture in terms of equities and so on. I mean, I think you can find arguments either way. You could say, well, that bonds will be a less attractive investment vehicle, and so therefore people will move to equities. It could also be signaling that all of a sudden the bond market is starting to crack, and this is the bond vigilantes, and people are saying, well, I'm going to require a higher rate of interest to take on the additional risk of carrying US government bonds. And if the government gets into trouble selling its debt, I mean, that has implications for the US economy. I'm not sure that's particularly bullish for equities. So just of interest, I think everybody should be just paying attention. I'm certainly going to be looking for this. I'm just wondering if this is a significant moment in time. Okay, back to the E-mini, the 40,500 tip bar chart. So midweek we had this, we're up at the 180 type level, had all of these bearish divergence, professional activity at the top. We've come back to test now on this retest on Friday. We had all this exhaustion buying coming into these highs at 180. We've sold off. We've come back in. We're up at 1175. Again, kind of weaker buying. We're still testing this 180 type level. Are we going to break through? Is it going to hold? Are we going to start to turn down? For me, this is like the last roll of the dice. Not dissimilar if I go back to the tip bar chart on the 30-year here. I talked about this the other day, where this is the professionals have started to get short here, and then we have a retracement rally back up here. Professionals coming into this turning point at this point here, and we get exhaustion buying, but that's their last roll of the dice to kind of get short, and then the market kind of sells off. Is that what we just saw here on the equities, on the E-mini market at this point here this morning, where we're trying to get back into 180 and people got short? So that's again of concern to me, of course, being a big old bear. Lastly, 1500 tip bar chart. I've got a couple of videos I'll tack on after this one. I was lucky to get short at the open. What happened prior to the open at 7:30 Chicago time, we had CPI released, retail sales released, we had the Empire State manufacturing results kind of come out, and all of a sudden we had all of this professional accumulation